3, 2, 1.
My name is Nick. I'm a full-time trader and entrepreneur. We put out tons of stuff for free for traders. These are real trades. This is real money. I'm putting my money on the line. This is going to be a live trading video here, locking in over $1,000 on this trade.
Wow, I'd love to get in on this.
Technical insights that really look good to me.
Here we go. We're live.
Well, hello, everybody, and welcome back to the stream. Thank you for being here with me on a Tuesday. I just wanted to read out this message because I thought it was very cool. Shout out to Michael Smith, who says, I just wanted to say I'm so thankful for you and your dedication to this morning stream that you provide for us on a daily basis. Without you, I would have never found the motivation and consistency. Michael, I really appreciate that message. Definitely was cool to read this morning. And thank you to everybody who is here in the chat, hanging out. Top of the morning to you as well, Lorenzo, and to everyone else out there. We are going to be taking a look at some stuff because, my goodness, things are moving today. And I guess you expected nothing less on a Tuesday with the Forex market just going crazy this week. We do have NFP this week, so things are naturally going to get moving. But I do just want to start out by saying, if you are new here, if you've been here for a while, regardless, I do appreciate you being here and hanging out. It means a lot to me that I get to do this every day. It's part of, what I do as a content creator, is to come on here, to meet people, to work with people, to share my ideas, thoughts, processes, and then to hear also from other people as well. So I am very thankful every day to be here with you guys. Before I do, while I'm on this thank you train, let me go ahead and say it. Big shout out to our sponsors, tradingview.com. Obviously, these streams, they cost money. They are not something that is free for me to do. I have a team of people that I pay to do their stuff. We also create, all sorts of content for free, but that does cost us something. So the sponsor here today is, of course, tradingview.com. I'm sure many of you guys already know TradingView, but if you don't, TradingView is this beautiful charting platform that I use every day. It has a million features and tools that are so helpful and so useful to be, for me to be using in my own trading. And so it was just the easiest sponsorship ever for me. It does not, I was already using it before they reached out, and then they reached out and I was like, yes, I'm happy to sort of dedicate some of the streams to TradingView. So again, if you're not already using TradingView, there's a link down below in the description if you'd like to check them out. Again, big thank you to them for letting us keep the lights on. Let's go ahead and get into today's analysis. Okay, so let's think about this. The dollar here is moving really well, and I have a trade on it that we're going to come back to. So I'm going to come back to what I was just looking at there just a second. Let's look at the heat map. So the dollar seems very, very strong today, which plays out nicely for me just because right now I do have some long positions on the US dollar. Well, one long position in particular against the Swiss franc, which we'll take a look at in just a bit. But you can see things are working out pretty nicely here for the US dollar today. Now, if you remember, I've been short-term bullish on the dollar, which means probably more on the short-term bearish side for gold, more on the bullish side for US dollar crosses, things like dollar CAD, dollar Swiss, dollar yen. And then selling other currencies relative to the dollar, at least right now. Now that can change, but for now, that seems to be the direction that I am taking. Momentum seems to be on the side of the dollar. So fighting that has been a little bit of a rough ride for a lot of people, I am sure. The pound giving back a little bit of its gains. I actually took a loss on pound yen yesterday. Some of you guys might have seen my trade there on pound yen, but I took a pound yen long. Thankfully, I stopped out fairly quickly with it because now it's down yet again today. So always a good feeling when you know that your stop loss got hit. But thankfully, you did get hit from a stop loss, because if you held on to it, it would have gotten worse, right? That's a great feeling as a trader, and it's something to recognize when it happens, because if you know, like, I don't know if you guys have ever experienced this. I definitely have myself. I will take a trade. When I was a new trader, I would be like, I don't want to hit this stop loss because then I'll have to like sit there and feel bad about it all day. I'd rather just hold on to this thing and then be like, it bounced back. And sometimes it would bounce back. And that's the worst part. You take a trade, you're long on something, it goes down, and then you're like, I'm not going to stop out. I'm just going to hold on to this. And then it comes back and you're like, yes, see, it works. I don't need a stop loss. But then you buy something, right? You buy something here and you're like, okay, I'm just going to hold on to it, because it's not going well, but I know that it reversed last time. And then what does it do? It does this, right? And then you're sitting there on a massive loss and you're kicking yourself for not getting out of the trade. So just something to say, something very important is, accepting and appreciating your stop losses when they get hit. is something important. It's there for a reason. It's there to keep me from taking ginormous losses on that. Nick, what's your personal opinion on scalping? Personally, I'm not the biggest fan. Like, I wouldn't do it. I'm not going to say you can't do it and make money doing it, but I find it incredibly difficult because of the high spread costs, and just the bid ask spread by itself is really tough to overcome when you're trading the 1 minute and the 5 minute. Most signals are on the London session. I don't really trade the London session. I trade the Asian and the New York mostly. Okay, so yeah, lots of stuff moving, you guys. We are going to take a look at a couple of the different dollar crosses. We are also going to be taking a look at gold today. I'm sure that's going to be a very interested discussion. But before I do, I want to talk about the trade that I'm currently in. I gotta pat myself on the back here because I did take a decent trade here on dollar Swiss. So let me show you guys this. Why are my order? There they are. Okay. So I have to be fully transparent with this. I got stopped out on my dollar Swiss franc trade twice. Okay. So let me see if I can. Okay. So I went long right here, and that's too big. We'll make it smaller. So I went long right here thinking that we could hold this zone on the retest. We did hold it. I ended up getting stopped out though. Took a small loss there. Then after we saw this sharp rejection, this looked like a wick on the 4-hour chart. I ended up going long again. Again, things went well for a little bit and then fell apart and got stopped out. Okay. I did not take profits up here. In hindsight, it would have been great to just take profits, but that's not what I do. I hold on to winners as much as I can. So I want to say that because in the context of today, it's a big difference because now you can see, okay, bam, took another loss. So I took 2 losses. I was feeling a little bit frustrated on my dollar Swiss attempts, but then today, or I guess yesterday, I took this retest right here. Price retested after showing some strength, broke out of this little wedge here, and now you can see it's running nicely. So the point is, and so this trade currently, what am I up? Currently, this trade is up $879, which is a pretty good trade, and I'm very, very happy with that. So I'm currently sitting at a nice profit. You might say, well, Nick, now it's time to take profit. We're at resistance, right? And that's going to be the next point. So I want to talk about this trade because I think there's a lot of lessons here to talk about where we currently sit. Because a lot of times I get like comments from people on YouTube who are like, "Oh, Nick, see, you should have taken profits," or Nick, you're dumb because you should have known it was going to do this or that, right? There's a lot of hindsight traders out there on YouTube, and I understand that, and I've been doing YouTube for a while now, so I know that is going to never stop happening. But what I do want to say is that for the people who are listening closely with this stuff, my goal here is not to predict when this thing is going to come crashing back down. My goal here is, now that I've got a trade in place, now that I've caught what I was looking for, which was a bounce off of this zone, I caught that. Now the goal is not to try and shut it down quickly, right? I shut down my losers quickly, and I do not shut down my winners quickly. I shut down my winners as slowly as I possibly can handle. So what I mean by that is, I will hold on to this trade. I think that this uptrend has potential to continue higher, right? I have mentioned that I am bullish on the dollar, both fundamentally and technically. And so for me right now, if we can get a break, what I'll look to do is I'll look to continue to trail the stop and to continue to let this dollar Swiss trade play out. This is something that is working out really well for me so far. And the thing is, a lot of traders, they will see a situation like this. They'll be up $886 or maybe maybe you're up $20 or $50, whatever your position means to you, whatever size is right to you, right? And they'll see a trade like this that's up on them, and they will just rub their hands together. They can't help it. They've got to close this trade out because they want to take the profits off the table. And for me, what I've found in my trading journey is that if I take this profit right now, although, yes, I take a profit right now, I hurt myself in the long run, because so often I have taken a profit right here just to watch a trade continue to run, and I miss out the trend that I called, right? So do you see what I mean? Like, the point here is that I hold on to my winners as long as I can stand it, and I get rid of my losses as quickly as I can. So the whole point here with this dollar Swiss franc trade is, now that I've caught something, now that I've got something on the line, I'm not going to just give up on it really quickly. And I think that is something that, more people I don't see a lot of people doing, right? A lot of people, they do the exact opposite. They hold on to their losers for a long time and they quickly cut out their winners. We've got a lot of stuff to talk about today, but I did want to talk about the trade here just because this is something that's on my mind. It's something that I'm paying attention to today. And as always with these streams, I try and keep it real. These are real trades. There's nothing fake about this. I'm not demo balling. Sure, I'm not showing you that I'm up 50 grand today or anything crazy like that, but this is real. It is no nonsense stuff here on my channel. I find lying to be exhausting. So we just do it right here. So if you enjoy my streams, if you enjoy my content, if you want to come back and hang out with me, if you're a new trader, you're an aspiring trader, don't go buy an expensive course. Don't go waste your money. Don't go waste your time. Come back, hang out with me, hang out with our little community here on YouTube. Shout out to everyone hanging out with me live. If you guys are not watching with me live, you're watching back at a later date, you can tune in Monday through Friday at 9 a.m. US Eastern. And if you're here with me right now, hit that subscribe button, smash that like button. What are we at on likes right now? I'm going to look at it. I'm going to go take a look. We're at 93 likes and there's almost 500 people in here. If you guys would do me a big favor, smash that like button. Help me knock that like button out of the sky real quick. That would be really appreciated. Okay, what do you guys want to see? Comment what you'd like to look at. USD CHF is a sell. Irving, maybe it is, but for me, it is a hold on my long position. I would not be selling this resistance. And let me show you something else about dollar Swiss. Let me show you something interesting. I would bet you, I haven't looked at this recently, but I bet you $50 right now that retail sentiment says most people are shorting the dollar Swiss. $50 on the line. Where's dollar Swiss? There it is. Yep, 65% of traders are short on the dollar Swiss. The reason I'm so willing to bet on that is because I know that most retail traders are fighting trends. And that is why so many retail traders get smoked, is because they're always fighting the strong moves. And it's such a dangerous game to play, to always be fighting strength in markets, because markets, they move. There's a lot of times there's momentum plays, there's trends going on. And if you're always fighting them, you're fighting an uphill battle, in my opinion. So with that said, what are we at with likes now? Look at that. You guys ran that up to 209. Thank you so much. That was really nice of you guys. Thank you very much. Again, come back and hang out with us every day. We do this. Again, it's something that you can come in, hang out for free, meet new people, hang out with other traders, get your ideas out there, etc. So with that said, let's get into some other stuff. We can take a look at some of the DXY crosses, or the dollar crosses. So DXY across the board, you can see it looks a lot like dollar Swiss. Moving up higher, to me, it looks like a very a quick run up to, what is this, 92.4. I think it's a pretty natural place for price to go. You can see strength coming in on the dollar today, and I think that seems like a pretty natural place for it to go. I'd be very surprised to see this price not make it up to that point. So dollar strength is in the building and working out in my favor for now. Lots of people saying gold. Let's get to gold, but we're going to wait for just a bit before we get there. There's a couple other ones that I want to do first. We'll take a look at Euro USD. Euro USD tumbling back over. Now, I missed this trade. I never got in because I wanted to get in at that 38.2. Missed the trade, but thankfully, dollar Swiss and Euro dollar, they are very inversely correlated to some degree, right? So when Euro dollar is moving down, dollar Swiss tends to be moving up, right? Because obviously you've got USD CHF, right? And then you've got EU, right? So the dollar is in the front of this one and it's on the back end of this one. What that means is that if you buy the dollar Swiss, you're buying the dollar, shorting the Swiss. If you're selling the euro dollar, you're selling euro, buying dollar. If we're buying dollar, right, these two things have some level of correlation, but in this case, it's inverse because the dollar is on the front or on the back. I know it was a little bit confusing of an explanation, but those two currency pairs and anything with the US dollar will be usually to some degree correlated in a way, whether it be inverse or not. Good day to you, Ivan, as well. Thank you for being here. Larry says, I must say, I took the trade twice with you, but did not take it the third time out of pure frustration. Larry, yeah, nice profile picture, by the way, Larry. That's, yeah, so the idea there with my dollar Swiss trade is that even though I missed it, my first two are a small loss. The point is, small losses are not really a problem for me as long as I catch the trade eventually, right? And it might have been on pound yen, it might have been on another trade, but the overall idea is I take small losses, and it frequently too. Like I take a lot of small losses, and if that's something that you can't handle, I would not recommend my trading style because losses are everywhere. But the point is small losses, and then when the wins come, they can really pay out for everything, right? It's kind of like, truthfully, a lot of us have like good ideas about something, right? Let's say you have a family-owned business, or you have anything that you do, like your sports, or I don't know. But what it tends to come down to is it's not about having like a good idea all the time. It's like sometimes it's having one good idea, one big idea that makes up for all the other attempts, right? I can give you a business example just because it's something that I'm familiar with. A lot of times in business, you try lots of different things. A lot of things fail. Most things fail. 75, 80, 85% of things that you try at, they don't work out. But then that one big idea comes along. It was worth the wait, and it pays back for everything. Same thing in trading for me. That's just my style. Anyways, with euro dollar, it does look like we're coming down a natural place here. It does seem like 1.185. Should that get down to that point, again, maybe we see another attempt by buyers. But for the most part, for me, I am bearish on the euro dollar. I think that it has more downside to come. And to me, a natural target for euro dollar has now become 1.175. So I think price is probably headed down to that point. Watching for the breakout. There may be some opportunities to look for momentum plays there for the euro dollar bears out there. Keep an eye on that. I think that may be something to watch on the lower time frames. We're looking at the 4-hour chart, but let's just look at the daily for a moment. So the daily put in a lower high, right? There's your high, then your lower high, and now actually breaking through a lot of structure. In fact, if we look at the 61.8 here, did we already break through it? Yeah, we already broke through the 61.8. So the hopes of holding this pullback here for the euro dollar, to me, look unlikely. It looks like the euro dollar is probably headed down to the bottom of this range. Now, if you were long in the euro dollar, I'm not trying to pick on you. I'm not trying to say, oh, you're a dummy for going long in the euro dollar, because I find that to be really not constructive when it comes to trading, because the truth is none of us know with any certainty where the markets are going next. It's just more about how you treat the trades that you're in. Do you hold on to winners and make them count? Do you get frustrated and make emotional decisions, right? If you're sitting here and you had a long bias on the euro dollar, which I did right around here, right? I cut that out when I saw the Fed change its tone a little bit. I figured momentum's probably to the downside for a little bit. But the point is, if you were long biased on the euro dollar, instead of just like getting upset and saying like, I'm going to just triple down and quadruple down and take giant positions just to watch this thing blow accounts, that's the sort of behavior that is really dangerous for a lot of new traders and a lot of experienced ones too. It's easy to get caught up in the emotions of wanting to be right so bad that you destroy accounts, right? Has that ever happened to anybody in the chat? I'm not trying to pick on you, because I've definitely put myself in situations where I allow, frustration and anger to actually dictate some of your trading. And it's a really dangerous thing that you think can't happen to you, and then it does, and you're like, oh my God, I'm actually a human being. Ayn Rand says multiple times. Yeah, see, it's something I think a lot of people just did from gold. Yeah. Gold probably looks a lot like the euro dollar right now. So we will be getting to gold. Don't you worry. I'm saving it. I haven't looked at it myself, so I'm ready. Painful lesson. Yep. Mariana says nope. Well, I'm glad. That's good to hear. I think it's a better practice not to do that. But anyways, yeah, I have, and I got squared off as well. Yeah, see, it's dangerous. Okay, a lot of you guys are awesome, because this is what I like. A lot of people are willing to just talk about their own mistakes and willingness to come forward and just be like, yeah, I messed up on that, because I think that's a huge step for traders. There's a lot of people who, like I said, the same thing, that refusing to accept losses and refusing to face your own insecurities and issues as a trader. They go hand in hand, right? If you're not willing to accept when you're wrong, this is a dangerous, dangerous place to play with your money. Okay. So the pound dollar seems to be coming down. So I actually talked about this yesterday, how I think price is probably headed down to this point here, but the first stop was this one. So it does look like we are currently tagging that. Can we hold it as support? That is the question today here in the New York session. Can we get a bounce back, or is this thing going to crumble? I would say, I'm not here to predict. I don't know what's going to happen next with certainty. My goal, however, is to look for opportunities that give me the best risk reward. So personally, I wouldn't really trade the pound dollar. I'd be trading the euro dollar, but not the pound dollar. So I would say, however, like a simple example of that would be, okay, if momentum is shifting to the downside and it looks like the dollar has some strength here, watching for the break, watching for the retest, that is sort of a reactionary trade to me. Because I'm sort of saying, okay, the sign is there, the signal is there that sellers are strong in this region. I'm going to go ahead and look for more downside, right? So pound dollar, I think a natural place for price to go would be down to 1.37. So if that comes into play, definitely could be a big thing for the pound dollar, because you're talking about a pretty significant move off of the highs, talking about roughly 550 pips there to the downside on the pound. So definitely an interesting one to watch for me right now. We did put in this lower high. You're talking about there was the high, then we had lower highs come in, and now, we're just seeing this price crumble. So again, natural place for price to go seems to be downwards a bit more. Now, if you're looking very, much higher time frame, you're looking at the daily chart. Maybe this is a pullback in an uptrend, but to me, it looks like we could even be headed to retest this 200-day moving average. From just a longer term sort of mean reversion concept, you have this idea, right? Where the 200-day moving average oftentimes is like this longer term area of support, dynamic support, right? And we haven't touched it in a while. So it does look like, the uptrend here may be taking at least a pause. Now, can it continue into, the second half of the year? Sure. But maybe it's just looking to reload, right? Maybe it's just looking to recalibrate, consolidate for a little bit here, move into a sideways market, and then look for some buyers down in these regions. So I think short term, maybe there's some seller momentum down to the 200-day moving average. That still leaves, it doesn't look like much on the daily, but you're still talking about, 100, 150 pips there to the downside that could be willing to play out. Again, the pound is sort of weak also off of the dovish tone from the Bank of England. Was it last week? Yeah. So again, seems to be sort of out of favor for the time being. While we're looking at the pound, let's take a look at pound yen. I want to show you guys something. So look at this. Pound yen, I took a trade on pound yen yesterday that did not work out. There it is. Okay. So I went long on pound yen here, right around this area, off of this zone, and then price tried, and then ultimately I stopped out fairly quickly as soon as it broke this range. And now I'm sitting here, I mentioned this at the beginning of the stream, now I'm sitting here very glad that I stopped out, because you can see price continued lower. So not only did we break out of the zone that I was looking to hold, but you can actually see that now that very same zone seems to be an area of sell pressure for the time being for the pound yen. I was taking this one off of the higher time frames, looking at, okay, overall upward trend here, looking for price had broken out, retested this, looked very promising for maybe a push past and continuation. But again, sometimes you're just wrong, and it's better to accept it quickly than to try and hold on to it, in my view. So for me, I took a loss on pound yen, but again, something kind of cool, because I'm glad that I did, instead of holding on to this stubbornly, because that would have been a painful experience today, right? So again, long here, got stopped out on this candle. So took a very small loss after price retraced very quickly. I just jumped out of there very, very quick before, this continued lower. So this is sort of an example where you're like, oh, thank goodness I had my stop loss in place, right? I think it's important when you do see that happen to just embrace it. Now, you're also going to see at times where it does this, where you buy and then it comes up and it teases you, it comes down, stops you out, and then what does it do? It shoots up like crazy. And that is very frustrating too, but you have to understand that you're never going to play it perfectly. There are going to be times where that happens to you. And then also you really just have to embrace the times where, you choose to stop out quickly, and then you avoid more collision, right? More problems. So, yeah. So pound yen, I day traded pound yen short, did well. Victoria, congratulations to you. Are you still bullish with the pound? I've paused a little bit, Ricky. I am, I'm not like bearish on the pound, but I'm just sort of on the sidelines until the Bank of England sort of changes its tone back to a positive sounding way, if you see what I mean. Okay, I think it's time, you guys. Let's take a look at gold. We'll pull up XAU USD. Let's get some hashtag gold gangs in the chat because, oh my goodness, look at this. Gold is breaking out to the downside, popping up on the screen there. Hashtag gold gang. Drop your gold gangs if you're part of the gang, and let's talk about it. So this thing fell apart. This thing definitely decided that it was going to go on holiday for the summer because it said, see you later, all you guys hanging out up here, see ya, right? And it's a crazy thing because I said this, I've said this many times on my channel. Obviously, I didn't know price was going to do this, right? I didn't know it was going to dramatically drop this aggressively. But what I can tell you is that I've known, and plenty of you probably know this as well, that this is how gold moves, right? Gold is a crazy, crazy asset. It can be trending so strongly, and then one day just decides no longer will I be doing this. I will be going back down to Australia for the summer, right? Like just like headed way down under. So you have to be weary of this when trading gold, that it can sometimes be a game of musical chairs, and you do not want to be the one without a chair, because that's what's kind of happened here. Everyone's getting their chair, musical chairs, everyone's having fun, music is playing, and then no longer, and we see this dramatic drop on gold. So how can you play this? What's the play here? What do you do? Do you trade this? Do you avoid this? Do you also go away for the summer, right? That's the question. Well, for me, when it comes to gold, it is very much a momentum thing, but also a fundamental thing. I put out a video, myself and someone on my team, we put a lot of work into creating a presentation about trading gold because of how popular it is and some of the key tips that I find very helpful for trading gold. You can go watch that full video if you'd like to. It's on my channel. It's one of my most recent ones. Just look up like Trader Nick, how to trade gold or something like that. I've got a couple different videos where I discuss that topic because it is a very unique instrument. But the big one there is the US dollar, because you can see today. So let's break this down. So XAU USD. This is fairly obvious, but I want to point it out. So today, like we saw, the dollar is having an incredible, strong moving day, right? A lot of positive news from the Fed recently, a lot of optimism around the US economy and the bounce back and potentially raising rates and, temporary inflation, things like that, right? There's a little bit of that going on. And that tied with, again, that big concept of, inflation is sort of transitory, sort of sidelined. It's not a big deal. Being downplayed is very bearish for gold, because many times a lot of you guys just see gold and you're like, oh, XAU USD, I'm just going to trade and make a bunch of money. And you don't pay attention to the whys. What is it moving for? Why is it doing this? Why, what is the most likely trend based on the fundamentals, right? And if that's you, I'm not trying to pick on you. I'm just saying that was me, right? So I know that, I used to be like, oh, I'm just going to trade this symbol because it's cool. I want to trade gold because it's cool and it moves a lot. But you put no effort into backtesting gold, no effort into studying the reasoning behind gold. And if that's you, again, I'm not trying to pick on you. I'm just saying that it is important that you do your homework if you're going to be messing around with something so volatile. So again, inflation fears a little bit curbed here, which are a steady bearish catalyst for gold. And then the dollar being sort of strong here today is also bearish for gold. So for me right now, gold is likely headed down to 1,700. I think that is a very reasonable move for gold to continue lower. At this point, we have officially broken and now closed on the 4-hour, at least, the 61.8. We've closed below the 61.8, which to me was sort of the last line of defense for gold bulls. So I am not willing to, go down with the ship here when it comes to gold. Although I was bullish back here, I am not bullish anymore, right? At least for now. That can change. Things can come back into bullish favorness maybe, in a few weeks or maybe even tomorrow. But the main idea for me is that Right now, we've broken key levels of demand. Things are not looking so positive for gold anymore. And to me, this is a natural, the path of least resistance to me seems like a move back to that double bottom low that we put back in, was it April? Yeah, March and April. March and April, we saw the lows back here. I think price is likely headed back to that point. Maybe not immediately, maybe not today, but maybe the next week, 2 weeks, 3 weeks, something like that could be in play. And again, that is just my opinion. Please understand that I am wrong sometimes, and do not just because I said that, don't go copy or don't go putting all your money on that. Like, that's not my goal with saying that. My goal with saying that is that is my conclusion from my analysis, but that is my educated guess, if you will, right? So anytime you see an analyst or somebody talking about markets, they're not like, oh, it is absolutely going to be doing this. I mean, some people will talk that way, but the main idea is that the gold market to me is a most likely moving lower. And so again, a natural place for the price to go to me would be 1700 to 1680, that previous double bottom low that we formed back in March and April. U.S. consumer confidence data being released at 10 a.m. Yes, that could be market moving. Is there anything else that we should pull up in terms of news today? Let's pull this up. Forexfactory.com. And let's see. So 10 a.m. CB consumer confidence. What about this? So the big one this week also, by the way, of course, is Friday. If you're hanging out with me right now live, don't forget to come back and hang out on Friday, because on Friday, I'm going to be getting up early. I'm going to be coming into the channel at an hour before usual. I will schedule that ahead of time so you guys can see it. But we're going to be doing an NFP stream where I basically talk about charts that have to do with the US dollar before the news, and then watching the actual spike, watching the release. So what you can do is, if you're not already, subscribe to my channel and click post notifications, turn that bell on so that you get notified when I go live, so that you can come back and watch that stream, because that one is going to be crazy. Last month we hit like 1,100 people in here, and it was crazy. So really a lot of fun. Those streams are high energy and quite entertaining, honestly. So we're going to watch the spike on Friday. So if you're not already, make sure to subscribe, and then also hit that notification bell so that you can come back and watch. But again, gold also going to be impacted by the NFP numbers. Again, there's high expectations going into NFP. I will say that, right? You've got numbers that are expected to be pretty good for the US. So we've got 700K jobs. That is the expected forecast, right? So if that misses, could be very bearish for the US dollar. And if it hits or it's better than, could be very good for the US dollar. So definitely watching out for that. So yeah, with gold, I think if you look lower time frames, you can even see this channel a little bit better. You can see that we were basically chopping around here, lots of indecision. And then finally, the sellers really came in hot today. So we were back and forth right here. You can see lots of different times where price tried to get above that zone, and then ultimately today falling through with fresh US dollar strength, right? So the US dollar is strengthening today, which is actually causing gold to decline. Again, the gold market oftentimes is seen as a hedge against inflation. Usually when other currencies are less favorable, or just, people are looking for places to park their money that's a little bit lower risk, it tends to drive the price of gold higher. Now that might sound weird because you're like, but gold is high risk, right? But as an investor, it's actually very low risk. But as a trader with margin and leverage and all that stuff, it can be very dangerous, right? But actually the price movements themselves are fairly conservative. Like, for example, we'll go look at the crazy moves. Like, this was a monster move in 2020 from 2018 all the way up to 2020, right? Saw a move of 78%, which is like insane for gold. But during that same time, the stock market had like similar moves. So for example, also all of this crazy sell pressure that's been coming in, that massive haircut, that was a 20% dip, right? So it's not actually that volatile as just like an investment standpoint. I mean, it is, but it's not like as volatile as like if you were buying and selling Tesla stock, for example. That entire move there was only 14%, right? Which, don't get me wrong, that's a big move, but it's just not, a lot of times people are leveraging up their accounts to the point that this move here is 14% of their account, right? So please be careful with margin when trading gold. It is a very, very dangerous instrument. I always mention that I think gold is the number one account blower that I've not for me, because I don't really trade it very much, but like it's of the people that I've witnessed blowing accounts, gold seems to be like the granddaddy of account blowers. So just be careful with that. Nick, on the retail Forex sentiment, what do the average short and long prices, distance from price mean? Charlie, I think that is like, so it tells you like where the average retail trader is long or short in. So for example, if we know that the average retail trader is long on gold at 1870, it means that most people on average are in the price holding on to a long position here. Does that make sense? Hopefully that makes sense. How to calculate that percentage you pulled up right now? You just do this. You just do shift click left or shift left click on trading view. Just drag it and you can see the percentage. All right. So that's gold. Let's see if we can find other things to look at today. What about euro yen? Euro yen, is this one moving at all? Yeah, euro yen coming down pretty hard today, also selling off just like pound yen. Interesting to see it, right? You can see, looks like it's probably headed back down to 131.2. Again, this is the 1 hour chart. So we're looking at a little lower time frame. What do you guys want to look at? Just drop in the chat what you'd like to look at, and I'll try and show it. Crypto Firma says, show your trading results. I do have a trade right now, USD CHF. I have one trade open right now. So my dollar Swiss trade, ooh, this is actually interesting. Let's talk about this. So I am still holding on to my long position. So I am up now only 587% dollars. Check this out. So actually, if you notice this trade that we talked about earlier on, right? In just that short period of time, we are seeing some rejection off of the highs. But in the face of this, I'm not going to rush to conclude that, oh, it's coming back down right now. Now, although I could be completely wrong about that, and price could come all the way back down to tag me out for a break-even trade, I'm willing to do that if it happens. If it continues higher, then of course that will be great. And I'll continue to trail my stops and let things run. So that's a trade that I'm currently sitting in right now. I called that trade out inside of our private Discord. If you are not already in our private Discord, I'll pop it up on the screen so you can see what it looks like. Here it is. So here's the trade alert that I sent out to members in our Discord. So I'll pull this up. There's the chart that I looked at. So price was basically sort of in this wedge formation, this little flag formation. Price broke out of it, retested that area, and that's where I jumped in on the long side. So took the trade, talked about why, and then this morning I moved stops to break even. So again, this is from here. It's just a low stress, low energy trade. So if it keeps going, great. I will look to trail stops. If it comes all the way back and tags me out for break even, all good too. I'll just look for another setup, look for another opportunity. And truthfully, that happens to me quite a lot, right? Break even trades are something that they're always a little bit annoying, but they're just part of the process of trying to catch big winners, right? If you are in the game of trying to catch big trades, you inevitably will take lots of small losses if you're stopping out quickly. It's just the reality of trading. So with that said, all the trades that I share are inside of our private Discord. If you're not already in the Discord, there's a link to join it down below in the description. It's the first link there. You can sign up on our webpage, and then you get access through there. It is not something that is free, but there is a promo code there down below in the description. If you would like to join us for a discounted rate, you get access to it. You get access to all the trades that I take. Our other analysts, Frank and Patrick, are also sharing their trades. We do a weekly forecast report, which is basically an in-depth research tool that we put together on some of the major markets, talking about what we are sort of looking at in terms of forecasting for gold, the dollar, the Swiss franc, GBP, things like that. We also do lots of research for our members from our team. We do live coaching webinars. I don't really do them, but our guy, Joe Barreca down in Australia, he goes live a couple times a week, answers questions, works with traders, all sorts of stuff. So if you're not already in the Discord and you are looking to join it, there, like I said, link down below in the description. Highly recommend that you join us there. If you're a new trader, if you're struggling, if you're just losing money and you don't know what you're doing, I would highly encourage you, try it for 1 month. See if it's a fit for you. You might find that it really, really helps you and stops you from doing some of the stupid stuff that we all tend to do when we are new traders and don't know any better. So again, just there's your pitch for the group. Again, there's a whole team of people that work very hard to make that the group that it is. So I always gotta represent, right? So of course, also shout out to my friends in the chat who are already part of the group. Appreciate you being here. And is there anything else? So I mentioned to take a look at some of the ones you guys wanted to look at. How about dollar CAD? Sure. We'll take a look at USD CAD. Take a look at this one. So dollar CAD here did find some demand here off of the pullback. It was just a little bit delayed. So the 38.2 price came back down to it, right? So price launched up here off of the Fed meeting, and then has been trailing back, found a little bit of choppiness here, but ultimately has broken out. The question is, can we get a move back all the way to the top of this range? 1.25 seems like a key spot there. We did not make it up to that point last time. So should things get explosive here again, I wouldn't be surprised to see 1.25 come into play. But I think a natural place for price to go for dollar CAD would be a little bit more of a retracement. Now, I am still long biased on the CAD as well. So dollar CAD would not be my favorite trade to take. The Canadian Central Bank has also talked about, or they are in the process of tapering, talking about raising rates. And one of the first sort of leaders in the central bank space to be talking about those things. So I'm not super interested in shorting the CAD very much. But just from a dollar strength perspective, I think it is very possible that if the dollar remains strong, a natural place to go would be a move back to 1.25 just about. Okay, so cool stuff. Cool stuff. With that said, you guys, I think I'm going to wrap it up today. Thank you very much for being here. We do have another show coming on in just a little bit here on the second YouTube channel. If you're not already on the second YouTube channel, if you're not already subscribed to it, we have lots of guests that come around the week, not just myself. I'm going to pull it up right now for you guys so that you can tune in to our next show, because I want you guys to check it out because it's my friend Ivan. He does a fantastic job. Very, very smart guy, very smart trader, and he has some different opinions than me. So if you want to hear the other side of the coin on some of this stuff, I think he is a little bit more hesitant on the dollar bullishness. My friend Ivan FX is in the chat, and he's coming on in just a little bit. So I want you guys to go give him a trial. Go check him out on our channel. I just shared the link in the chat. So go grab that link, go click on that link and sign up. Just hit like the, I don't know what you call it, like the set reminder, or just open that link and Ivan will be on the show in just 15 minutes here. So go check it out. Go hang out with us there, and we'll see some of you guys on the second channel. Again, on our second channel, we're going around the week with different analysts, different people from around the world who are tuning in, sharing webinars, sharing educational content, all for free, just bringing value to you guys on a daily basis. So support us in our mission to continue to create free content for traders by subscribing to our second channel, A1 Trading. So thank you guys very much for being here today. Have a great rest of your day. Happy trading. Be safe, and we'll see you back tomorrow.
I know you were expecting Nick, but my name's Julie and I do the real work around here. I wanted to take a second to thank you guys for watching the show and tell you more about some free content that we offer. One of the things that we offer is a free email newsletter. So if you click the link down below, you can sign up for free market analysis, trading tips, and exclusive offers. Every once in a while, someone here at A1 Trading takes a crazy trade and you'll be the first one to know about it. See you guys next time.